Introduce, of course, our guest for the afternoon. That is Nixon Shigoli, the AR Kenya Insurance Managing Director, joining us this afternoon. Welcome.
Thank you.
All right. Now, of course, we've had a lot of conversations on insurance in general and talks about how the penetration rates in Kenya are not as high as someone would expect. But we have seen the insurance industry undergone growth, with 2017 full-year gross premiums topping 207 billion Kenya shillings. So I just want to start off with the conversation on what are some of the challenges that currently affect medical underwriters in Kenya.
First, let me thank you, Malika. Let me give you some background before we delve into the discussion. For the first half of the year, yes, the results are out for underwriting insurance industry, and 71 billion Kenya shillings was collected in the first half of the year for both all the classes of insurance. Mm-hmm. Mostly that is like a 3 billion growth from last year. Last year was around 68
for the half-year period.
68 billion, half-year period. Okay. And that signifies a growth of around 4.5%. Mm-hmm. Last year, 2017, the growth, same period, was around 6.3. So there's some level of decline in collections or in terms of industry performance on a revenue perspective. But that is where the good story ends. Now, the other side of the story is that maybe the part of the good story is that motor insurance and medical insurance contributed the highest growth, medical having a 6% and motor private having a 8% growth within that period of 6 months. However, on the side of utilization of claims, motor insurance in general, together, both private and commercial, contributed, yes, 2.4 billion loss, industry loss, against the total industry loss of 2.7 billion. Now we go to medical. Medical class collected around 23 billion, mm-hmm, in the first half, okay, of the year. And out of that, 74% thereabout went into payment of claims. Okay. So that is those are the numbers that play into the insurance industry, affecting the delivery of medical insurance. Now, how does that play in? When you get 74% of 100 shillings out to pay claims, it means you are left with around 26 to divide between the cost of acquisition, mm-hmm, which is distribution cost, around 10%, okay, and we are left with 16%. Currently, the management expense ratio for the industry, because of the various issues around managing insurance, especially medical insurance, is at around 24. So you spend more than what you are left with, because you are left with 16 if you net from 24.
So profit margins are slim.
So you are negative, actually. Okay. Negative, yes, 6, negative 8, thereabout. That's the main challenge.
All right, that's the main challenge. You've brought up, of course, medical insurance, and we've seen that non-communicable diseases actually accounted for 31% of deaths in the country in 2015. And Kenya's Ministry of Health has also, done a lot of things in order to sensitize the population when it comes to non-communicable diseases. We're talking things like diabetes, heart disease, among others. And of course, combined with high service charges, provider-induced utilization of services and other servicing of patients on a fee-for-service basis, it's really driving the cost of Medicare up when it comes to that. And when you talk about medical insurance as well, and it comes to this entire situation, then how do you think we're faring?
That question is directly affecting the medical insurance industry, because when you have a sick person, especially for non-communicable diseases, cancer, for example, you spend almost, even if they are insured, you'll spend all the insured cover, and then you'll go back into your pocket to beef up that cover that you had. And this, therefore, affects the overall insurance industry's ability to price for these particular non-communicable diseases. Mm-hmm. Because the element of affordability of insurance is pegged on accumulation of factors, non-communicable diseases being one of them. Now, what insurers have done, and including AR, is to create levels of insurance to at least cushion the client and cushion the company from the losses that can arise from that particular, insuring these particular risks. But mostly, all the risks associated with non-communicable diseases would be insured, only that they will eat up all the premium and leave the industry the way we've seen.
So of course, it's a tough balance between serving the customer, serving the institution,
yes,
and
so
the industry.
all underwriters have, and AR leads in that, is to try all the time to balance between servicing the customer to their satisfaction and leaving something small for the owners of the company.
Okay, that was now medical insurance that we were talking about. And I know when it comes to the underwriters approving the applications that do come in for possible clients, then you do a health test, and you of course get through the checkups and see whether or not the company wants to take on that particular client. When it comes to non-communicable diseases, how likely is it that an already a sick person who's coming now to get insured is likely to gain coverage?
And most insurance companies would give cover for non-communicable diseases under the sub-insurance called pre-existing or chronic condition.
Yes.
So most of them would give insurance. What varies is the amount of insurance that you'll get and the amount of premium you would pay. At AR, we give insurance up to 5 million shillings to take care of such non-communicable diseases for our high-end products. And we intend to launch a product that will have no sub-insurance within the main insurance that takes care of non-communicable diseases, because we realize the challenge that this is giving to the common Kenyan. The other aspect of that is, now when you join the first year, sometimes the conditions are set because of the likelihood that you could come in with such conditions. So there are waiting periods. You say 1 year waiting period. Depending on the cover, it can have no waiting period, so it means the cover takes effect immediately. And if it is 1 year, it means the cover takes effect after a year, or 6 months. The cover takes effect after 6 months. Okay. So we afford members the ability to take insurance, either on immediate basis or deferred basis. Of course, when it is immediate and there is likelihood of occurrence of the event, then the pricing is a bit steep than when there is no likelihood of occurrence of event. Okay. Now, medical examination is only for members who have reached a certain age, because of course the probability of then these issues being there come in. Yeah.
Okay, so there's an age benchmark there when it comes to the examination factor. But keeping with AR's insurance cover, what informed your decision to double your claim reserve this financial year to 1 billion shillings?
Now, looking at the factors we've just discussed, there is the element of non-communicable diseases, there is the element of issues at provider level, either issues over-utilization or over-servicing, either induced by the provider or induced by the member. There are all those issues, so you need to create enough reserves or enough basis to pay for such claims when they arise. Remember, the industry ranks AR as #1 in payment of claims, and we do not want to reach a point where we are unable to pay claims because we didn't make enough provisions for them. So last year, we decided to double the reserves for this year to 1 billion. That reserve remains 1 billion to pay for future claims, which is a big sacrifice on the part of the owners of the company, because they have to give up. That means you've given up some profit in the short run for the gain of the client and to benefit in the future. Okay. That's why we create a reserve of 1 billion, which we have maintained that reserve to make sure any uncertainties in the claims, the way they are coming through, they don't hit us from a profitability perspective.
Okay, so we've talked about medical insurance, but I want to steer us a little bit in the direction of housing insurance. As we've seen, one of the pillars of the Big Four agenda of President Uhuru Kenyatta's is affordable housing. Yes. And we've also seen the government actually supposedly give 6.5 billion towards this particular endeavor. He wants 500,000 houses by the end of the final term to be up and going for the population. When it comes to housing insurance, I know the uptake is quite low. As of 2011, domestic insurance was 1.8% of total premiums. And, people don't realize maybe that it safeguards against theft, it safeguards against natural disasters, fires, and more kinds of damage. What do you think needs to be done when it comes to promoting housing insurance, and how necessary do you deem it for the ordinary citizen?
Housing is, especially insurance for housing, should be as important as insurance for motor vehicle. Because you travel, of course, motor vehicle has more exposure, but even housing has some level of exposure. Motor vehicle has compulsory element, the third party element of insurance, and there is the comprehensive one that is optional. But housing should be in such a way that it is insured just like motor vehicle would be insured. Now, most Kenyans do not know that insurance for a building or contents in a house is very, very cheap. And in the case of any event, the insurance would pay for the contents in the house or the house itself in case of a fire, in case of any natural disaster, and things like liabilities. You have house girls in the house, you've kept pets. A visitor can come and can be bitten by the pets you have.
Yes, yes.
That insurance would take care of it within the housing package. And what's more, your phones, your laptops are insured under the whole package of housing, under the all risks element. So it is a whole package that Kenyans do not know that exists.
All right.
And the AAR has a big platform or big reinsurance to take care of housing needs or housing insurance for the public.
Okay. Now, thank you very much for joining me, Nixon Shigoli, AAR Insurance Kenya Managing Director, and shedding some light on different factors